Right, so while we're sitting here waiting for this trade to come to fruition and meet the take profit, again using the opening range model that I've been teaching you guys with the first presented fair value gap, I just want to quickly take these off and then we're going to go up until the daily time frame and work our way down. And I want to show you my thought process and everything I used to get into this trade today. So starting off, we can clearly see that we have our high up here and we have our weekly open here, and Tuesday has made a lower week below this swing low inside of this larger weekly imbalance. And then from the Wednesday, we've traded above this order block, the previous day's high, and this new week opening gap. And then on the Thursday, we can see that we've used it as support and continue to trade higher. So if we just look now here on the 1 hour time frame, we can see that that was that Tuesday lower week. We expanded here on the Wednesday, and then on the Thursday here we consolidated with the end of the day from the AM session starting to expand and the PM session also expanding. Now, when we get into the new day here, we had a further bit of expansion carrying on from the PM session. And then once we got into the London session, we just had this back and forth. We had this large spike higher and then it went lower. Okay, so when I was here at this point, I was looking, okay, well, what is the direction? The direction is clearly higher. The weekly profile is showing us higher. My draw and liquidity is up here. We're at all-time highs. I don't want to be fighting all-time highs. And I'm using these order flow, these discount arrays to support price. Okay, these levels here are weekly gradient levels that are supporting price. We can see we have this old end dog. We're above it. I want to see this hold support on price not get below this midpoint. I'm looking at this order block here, which I've measured out also on the 15-minute time frame. And then I was looking at this as our premium array where I wanted to see price reject from and then give us our manipulation below these stop losses into this discount array at the correct time to send us higher. Okay, so we go from looking at the weekly profile, which is Tuesday low of week, and we are currently in the expansion looking to draw up to the all-time highs. And then we go on to the session profiles, the daily profiles, sorry, looking at what the previous sessions have done. Okay, there's been expansions through the previous day's PM session, expansions through Asia, back and forth consolidation, priming of orders during London. So I would like to see New York sweep these lows and then start to run higher. Okay, so if we go from profile to profile to profile, now if we go on the 1 minute and we see that we have the 9:30 open here and we spiked up higher and then we started rejecting, we created this first presented fair value gap, which is we're going to be using for order flow ideas. Now, it's enough to believe that, okay, we're looking for a continuation here, okay? So as you can see during the London lunch, we already had this expansion lower reach into this order block and we started expanding higher, okay? Now that we have this consolidation, we wait for the opposing side of our draw and liquidity to be swept into our discount array, and then we start looking for it to expand higher. And now here, as we've already started expanding higher for the New York session, I'm just going to drop into the 1 minute here. And as we expect this low to stay in place as it is at that order block, we've got this expansion higher. After we take this buy side, what we want to see is a retracement to fair value, sweeping sell side liquidity, and then giving us the same sort of thing that we've been looking for in the higher time frames, as it's all just fractal. But now this is where our actual model comes into play, as all the rest was just set up. Okay, so now, this is our discount array, this new day opening gap, this is our sell side liquidity here, okay, and this is our first presented fair value gap. This is my short-term draw on liquidity, and this is my longer-term draw on liquidity. But now I have marked out this vertical line in red, and that is because this is the 10 a.m. news. So we're not worried about whatever's happening here. Everything here in the first 30 minutes is just priming and trapping retail traders on the wrong side, for then 10 a.m. to come along and sweep the liquidity here into our discount array, make a low, revisit the first presented for value gap and trap traders to thinking that we're going bullish. and then again take out this low one last final time before reversing higher. But now, not only is all of this part of the criteria, but now you might be wondering what this beige 50% line is. If we go on to the regular trading hours here, we can see that this line is measured from the previous settlement's close to today's 9:30 open, and this is our midpoint. And this is converging with all these other levels like this end dog and below this sell side liquidity, and it has caused a manipulation after 9:30 and specifically after 10, which is that news driver. So now, once we have all of this met, all we're looking for is a change in the state of delivery, okay? So if we put these execution marks back on, we can see that yes, we had the change in the state delivery down here with this shift above this order block and this inversion fair value gap and the creation of this new fair value gap. But this is more advanced stuff, and that's not what we're here to teach today. But then we had this shift above this market structure here, and this is also a shift above the midpoint of this first presented fair value gap. So after all the time has been met, after the news, we had this manipulation into our discount key levels into the opening range gap midpoint, and then we traded above the first presented fair value gap. That is when we can start trusting this, okay, to be used as support on price. As we can see, it is being used as support on price. Order flow is showing beautifully here with these long wicks that it's rejecting from this midpoint here, and then as we traded above the high of it with this big large candle and then traded back into it, I got my entries. And then we went into this consolidation. We revisited the top end of the first percentage for value gap again. And we just had this consolidation for a bit, also around this 4-hour premium imbalance CE. But we can see how the wicks are just showing us the respect of it, that there's no bodies closing below it. And then as we started breaking out and showing that we were displacing higher, I took another entry. And then I sold a little portion short here because I just knew it was messing around me and going to take some time. So I just thought I would roll a bit off, and then I have moved my stop loss above break even now. Okay, so I'm in profit, so I don't really mind what happens here. So I will jump back in with you guys once we see the full result. So I have gone to sleep and I have woken back up. So just a quick check-in. It's around here o'clock, it's about 12 in the morning for me, so I go to sleep. Another big reason why I took a partial up here. And as you can see, I was stopped out in balance, so my stop loss was here in profit. And I was stopped before the actual run in the middle of the PM session to the high and to this quadrant level that rests just above it. Now, realistically, my stop loss should have been here below this low, as this is the recent accumulation and this is the dealing range that it retraced into, touching this balance price range and the high of this 4-hour premium imbalance before using these macros to continuously send price higher. So again, we were stopped out in profit, so no problems. Target wasn't reached, but still a winning trade overall, and the model still presented as suggested. So I hope you found value in this, guys, and I look very forward to speaking to you in the next one. Ciao.